looking to see here if we get a little bit of a rejection spot. You know, we kind of got this double top from this previous swing high here, or do we continue to kind of push into 932? If we continue to push into 932, we've got a 200-day moving average there, as well as a 50-day moving average on a 5-minute time frame. I might be interested in just taking a little bit of a scalp here into this supply, right? So kind of seeing, do we continue to push up into this supply? And if we do, maybe I have an opportunity to take a little bit of a scalp back down. Not too interested in chasing a continuation on this long bounce. Again, our play was the 20 SMA play, right? Our play was the bigs bottom down here at the low of day. So those were our plays. I don't really want to chase this one here. But I mean, I'm curious to see what do we do once we get back into this 200-day moving average. Again, I'm fully interested in the longs again after we clear out 940s, 950s. I'll be more confident in the longs. So far in the kind of trading that we've seen today, the kind of price action that we've seen today, the better longs have come off of the extended moves down and finding those bounce areas. Extended move down, finding the bounce area. Let's just kind of hang tight here and see. It's that little test of that 200. I want to see it get just a little higher. I want to see it get just a little higher into maybe the 30s. We're gonna try just some small size here. And we're gonna try some small size. Let's see. So far we've had some good trades here for the room, right? I mean, I'm just kind of looking at the daily channel today. We've got Nate with 267.50 on a PA, Neil with you know 5 accounts between $30 and $60 a pop. Nate had another one for 288. His top step eval at 205. What else do we have here? John at 649. We had Burks. A little bit mixed bag there, split half and half on the gains and everything. We already know what happened there with the copy trader issue. Pretty good, man. I think the one that takes the bag today is Necky's swing on Nvidia, right? So far today, our room in Evolution's 88% green, 13% red. Only one red today. Not bad. I'm looking at resistance at 934 and then 943. Ultimately, again, bulls would kind of take control of this chart over 947. I'm looking at support at around 905s, right? Around 905. Those levels to go. Just keep an eye on those levels. Market, I mean, again, we're going into that lunch hour here. It's going to get a little choppy. That profit target was just hit, guys, on that little bit of a scalp. The PA accounts. So he's got another PA profit at 191. Guys, I really like that idea. I really like that idea when you have multiple accounts, right? When you have multiple accounts, to the copy trading is great, right? And I do it. Right now I'm copy trading 3 accounts. I personally like the sweet spot between 2 and 3 accounts being copy traded, right? Depending on how many accounts that you got, copy trading them between a few of them, right? Now, if you have 10 accounts, 20 accounts, I'm not a big fan of copy trading all of them together. I know there's a lot of people out there who do it. It works well for them. That's great. With me, you could have issues with the copy trader. You could have issues with slippage. You could have issues in the market in general, right? You can have just any type of issue. And I don't want to have that on my shoulders of something bad can happen and I lose everything, right? Great. I'm also a big proponent of making $100 here, making $150 here, and kind of moving on to the next account. So even if you're not copy trading, moving on to that next account, so that way you can, be trading stress-free, essentially. You're essentially spreading out your risk, okay? I'm a big fan of that. And so far this week, I've been a big fan of, to be honest, making between $100 and $200 times the 3 accounts and being done with it, right? On the funded account that I did trade today, I think that one's up like 266 on a few scalps, especially early in the morning. Those momentum plays just through the 200, through that linear regression, and then I took that big bottom bounce, the first one. And again, I'm content with that, because the way I always see it, when you're looking for payouts or even when you're looking to get funded, don't worry about how much you're making today. How about we just make some good trades? We make some cash. Don't worry about the dollar amount. Come back again tomorrow and do it, and then do it again next week and do it again next week. And guess what? At the end of 30 days, then really analyze your numbers, your profit and loss. You should be pretty close to, if you're taking those numbers, pretty close to A, passing an evaluation, or B, ready to take a payout, right? So again, we don't do this for free. We don't do this because it's great for our health. We do this because we're trying to make money. And it makes no sense to sit here and do this if we're going to make stupid trades every day because one day we made $500, one day we made $2,000. We think we're going to do that every day. Let me just put something into perspective for you, especially a lot of you guys on social media, on YouTube. Now my guys in my room are pretty good on it as far as being realistic. But when you make $1,000, $2,000 on these prop firms, evaluation side, this, that, and the other, because evaluations don't mean shit at the end of the day, right? Go out there and spend $500 and go get 20 of these evaluations and go try to pass them as soon as possible. That's the way I feel. But if you are trading, you know, with a respectable level and you do make $1,000 a day or $1,500 a day or $700 a day, guys, if you do that every day, you're talking about making 20, 30 grand a month. You're talking about making $250,000, $500,000 a year. Does it really even sound right? I mean, for every $50,000 evaluation funded account you only got $2,000, $2,500 worth of drawdown, right? So you're not going to go out there and make $30,000 off a $2,000 account, right? If I go put $2,000 in an account, in a personal account, my expectations are not to make 20 grand. My expectations are to try to make, you know, $200 or $300, $500 a month, $1,000 on the month would be great. I mean, that would even be way, you know, like not even realistic at all. Like if you have a $2,000 account and you're making $1,000, you're making a 50% return on your investment. Like, think about it logically. Does that even really make sense? Forget about the 50,000 quote unquote you're trading. It's paper money. It's funny money. You have a $2,000, $2,500 account. Go out there, make $50 a day. Prove to yourself that you can do that. Prove to yourself that you can make $1,000 in the month. Prove to yourself that you can take a payout. Right? Going back to that play, I was in short. I got in short once we got up to this 250-day moving average. I got in short. I only had an 8-point take profit, right? It was 5 micro contracts. I was looking for $60. That's it. Not a lot. Not trying to rob the bank here, right? We got the little bit of a flush here into that 10-day moving average, and the bracket order closed it out. It is what it is, right? Closed it out for a profit. So the power of getting into a rejection spot and potentially coming down to the next area of demand, technical analysis wins yet again, right? It wins yet again. So get rejected at one supply, come back down and test one demand, lose that one demand, which was the 5, come back down and test the next level of demand, which was the 10. So if we lose the 10-day moving average, maybe do we trade or try to trade close to 890? Maybe. John with another $221. Bodo Man took a little bit of a hit on his PA accounts. I'll make a note. I'll make a note on what Bodo said earlier. Earlier he had made a post, and I'll kind of emphasize on it. Earlier he had made a post that yes, he was green on his multiple accounts, but he wasn't too confident in the setups and wasn't too confident in the trading, but was managing to make money. Okay. Anytime you guys run into that type of problem, right? Anytime you run into that type of problem where maybe you're taking some trades, you're taking some scalps, but maybe you're not seeing the market all that clear, okay? The best bet, and this is obviously easier said than done, is to lock yourself out for the day, okay? It's very, very hard to do because you feel like maybe if I stick around longer, I can see the market a little better. Maybe if I stick around longer, you know, I'm already green, maybe I can just keep on doing what I'm doing and make more money. You're running the risk of not seeing the market correctly and going on tilt or becoming an emotional trader. It's nothing on Bodo. He does really good, fantastic, right? He does fantastic pretty much 90% of the time. But when you don't see the market clearly and you are trading either a bigger size, right? Bigger size, truthfully speaking, it's not because you don't know what you're doing. It's not because you're a bad trader. It's not because any of that. When you're trading large size, one day can erase everything that you've done this week. It only takes one day. Hell, it only takes one trade, right? You don't get out in time and the trade just continues to go against you. So again, do not sit there. If you find yourself in that type of situation, you can internalize that, right? You can internalize that as far as like, oh man, I'm not a good trader. I don't know what I'm doing. Maybe I need to do something else or find something else. Identify what the problem was, right? Were you not seeing the market clearly, not lack of confidence and emotional discipline? If that's the problem, then you need to make that a mental note and you need to kind of really work on that. We all go through that. I go through that all the time, right? I struggle with that all the time. Sometimes I feel like I'm in the groove and I'm overly confident and I'm taking trades that I shouldn't be taking. Guys, we're breaking down the 10-day moving average here. But also if it's just a matter of sizing issue, because I run into that issue a lot of times with, especially with the valuations, being that I'm not going to sit here and take 30 days, 60 days to pass an evaluation. I'm trying to pass them quick. It's a business decision for me to get multiple accounts and to trade them aggressively to get to the funded stage. Once I get to the funded stage, then and only then I treat them as real cash and I trade them the way I trade my normal personal accounts, okay? If the issue is just merely sizing, right, where you maybe not seeing certain setups clearly, you're oversized and you take a bad hit, shrug it off. That shit's gonna happen, and that's just a part of the game. We know that those days are coming. We know that those trades are coming. We already know that, right? It's not like we're shocked, right? We're not shocked when we do that to ourselves. So I know Bodo's a good trader. He's been here for a long time. He'll shake that off. Again, only evaluation accounts. It's not like, you know, it's some funded account that was due for a payout end of the week type of stuff, right? What came undone in one day can easily be put back together tomorrow. And he's still profitable on some accounts. So it's not like, you know, it's not like he's trading 20 accounts and blew all 20 accounts up and is starting from scratch. He still has multiple accounts going with positive balances and this, that, and the other. So it's just a handful of accounts took a little bit of a hit. And that's truthfully the only way you really learn and progress as a trader, is identifying those type of days, right? I mean, I do it all the time. I do it all the time where, you know, I take a stupid, silly trade and then I go back and I, you know, after the market is over and I back test that setup or the reason why I was taking those trades. And sometimes it makes absolutely no sense, right? I write it down. I'm still old school about it, right? I don't use any fancy, you know, journaling software, nothing. I write the shit down in a notepad. I look at it and the next morning I read it and, you know, and then fucking throw the note away the next day, right? Guys, when we broke down through this 10 SMA, you know, we have potential to come back down and backtest this 20. We're looking at 890s. So if anyone is short, right? I got short up here. If anyone is still short, think about taking your gains off or at least moving your stop loss to break even, okay? You got to go into protection mode and move that stop loss to break even. Even though today price action has been a little bit weaker, the bulls are not asleep, as seen here with an aggressive bounce, as seen here with an aggressive bounce, right? They can step in. So far, this could just be putting in a higher low back down here into the 90s, even the 75s. I can see us pulling back into the 75s, halting, and then driving back up to the upside. right down to this 20 SMA now. It was a good rejection spot there. And the only reason why I was thinking about that rejection spot there, you kind of notice the two prior swing highs kind of stopped here, we stopped here again, we put in that new low, we bounced, we were kind of consolidating here. And when you look at the levels of supply that were there, 50 EMA, 200 SMA, those are, and 50 SMA, those are big levels of supply on any time frame. Doesn't matter if you're looking at the 1 minute or you're looking at the daily. Those are big areas, right? Those are big areas that tend to get respected on the first go around, right? The first go around always tends to get respected a little bit. And then it normally takes, 2 or 3 times before you break through that area and you see significant damage, right? Where buyers really start to clean up the sellers that are sitting in these areas. And if you also kind of think about it, right? Besides this prior swing, these two swing highs, if you kind of go back to this morning's open, when we lost the 200, well, that was significant, right? Because we dropped all the way down into this 200-day moving average. They tried to rally, and then we flushed. So all we essentially did, right? All we essentially did was come down and backtest that original breakdown. Now, if we get back up into the range over 950s, then maybe the bulls are going to have a little bit more power, more staying power. If I was to pull up, I'm going to take this off. If I was to pull up the 1 hour chart, right? Well, we had a nice aggressive reclaim of the 1 hour 50 SMA, and we pushed right into supply. So when we lost the 20 SMA on a 1 hour, we came down to the next area of demand, which is a 50 EMA's SMA. Once we overshot the 50 SMA, bulls stepped in, reclaimed it, and came right back to the level of supply. So ultimately, what I would be looking for going forward, if the bulls are going to have any power, is I need to see us get over 18,933 at least. That would be getting over 1 hour supply and the previous 1 hour candle, and would also be confirming a 1 hour 20 SMA. Okay. I'd like to remain a little bit more patient here as we are in the middle of today's range. If you kind of go from, the high down to the low and you look at where price is at now, well, wouldn't you say that we're about 40-50% in that range, right? I'm not a big fib guy, but if I was to drop a fib from high to low, and I could have to change my damn settings on it, but let's see here. We're talking about a 50% retracement from high to low. So from the high to the low, we've bounced and tried to reclaim back about 50% all the way up high, all the way up to the 61.8% retracement, right? So this is a good bounce. This was a good rejection spot, and I don't trade fibs. I don't even use them. Why would? Again, not because they don't work, but it's because if if you're watching and you notice all the shit I have on my chart anyways, do I really need them? I mean, I've got enough junk on the chart. I'm just saying, it's technical analysis is technical analysis. If your levels are right, the levels are going to match up. We're all looking at the same charts at the end of the day. Take that junk off the screen. curious to know. I'm curious to know if we're going to hold here. This is where trading becomes painfully boring for me when we're in the middle of a range. When we're in the middle of a range, it becomes painful. Because I'm the type of guy, if we're going to go down, great. Let's just go down. If we're going to go higher, great. Let's just go higher. I hate trading in the middle of the range. You know, it's just a waiting period. But, one of the best things you can do is become an amazing waiter. Amazing waiter. Because it's easy for a trader right now to say, hey, we're going to bounce, get long. It starts trading lower, get stopped out. It's easy for someone to say, well, if I go short here, I'm going to make more money once we do come back down and back test the lows. It continues to go higher. How many of you have done that, right? It's like, we're all guilty of it. We're all guilty of it. But when you understand and identify that's exactly what's going on, as far as you trying to anticipate where price is going, is when the market stops you dead in your tracks and proves you otherwise. Just like everyone who thought for months and months and months now that Nvidia can't touch 500, 800 is crazy, it's never going to touch 1,000. Look at what this thing has done since the beginning of 2023. Essentially, someone could have put their life savings in Nvidia January of 2023 and quadrupled their money, quadrupled your cash, right? Months ago, when Nvidia was trading around 450, 500, they were coming in for $1,000 and $1,200 calls deep out of the money for end of 2024. $1 million bets, $2 million bets, $3 million bets. Are they crazy now? No, they're not. But you look around social media and you see people talking about this is a bubble, this AI crap's never gonna last, blah, blah, blah. Whether it's a bubble or not, people are out there making money on the move. Don't be such a concrete thinker when it comes to trading. Don't let your own personal bias outweigh what's going on in the charts. It's just like years ago during lockdown. Years ago, I would have people come into the room talking about Fubu TV and Corsair and Wish of all things, right? Wish. Things are going to the moon. Keep buying, averaging down, all this crap. What happened, right? Where's Fubu TV now? Where's Wish trading at now? Same thing with AMC and GameStop. Where are they at now? Did people make a lot of money? Sure. But would you say that the majority of people during that time made money or lost money? The majority. I'm not talking about the 5-10% of people out there, you know. I'm talking about the majority of people got stuck holding the bag. And I would tell people all the time, this stock has now lost its daily 50-day moving average. That's never a good thing when you lose a daily 50-day moving average. You know, why don't you wait, let it bounce and reclaim its 50-day, and then we can go long. No, it's better price down here, better price. Some of these stocks never came back. Like, for example, the big one that I knew was someone came into my room and they were buying Wish, right? And I'm not talking about small money here. If this chart even wants to load. They were putting big money into this thing. Whoops. Big money into this thing. Stupid chart's not even loading. Well, forget about it. Moral of the story is that they went in $55,000 below its 50-day moving average, talking about it's going to bounce up to 15. It never seen 15 again. That's the moral of the story. A little bit of a higher low here on the NAS. Let's take a look at the ES really quick. I don't show the ES too much love, but basically stock chart looks the same. as the NAS. Now, again, are they correlated? Sure, to a degree, right? The NAS and the ES is correlated. Maybe one's moving a little bit faster than the other as far as, where they've started their move, but generally speaking, they are correlated. The ES index, the S&Ps, is built to be a little bit more safe, right? So it's not going to fluctuate in price as much as tech heavy NASDAQ. And typically speaking, if NASDAQ is screaming higher, well, then the S&P should be trailing right behind it, right? If the NASDAQ's going lower, then S&P should be trailing. Now, when you get a divergence, when you get like the S&Ps are just pushing higher and you get tech selling off, there's a problem there, right? And the problem is going to be big tech, and what's actually keeping the S&Ps going higher is one of the other industries that's in the S&Ps. And you have oil in there, you have retail, you have banks, and so forth and so forth. So you got to kind of find that divergence and see where is the outflow going. If money is outflowing from tech, right, from growth, where is money flowing into? Is it flowing into commodities? Is it flowing into retail? Is it flowing into finance? Is it flowing into one of these other sectors that's not tech, right? But other than that, the ES should be tailing the NQ in any which way that it's going. When you get that divergence, that's when we have a problem. We need to start looking under the hood a little bit more. Now, from the futures trading side, the ES can provide a little bit more slower paced moves, which can be beneficial for a trader who doesn't like the big up and down swings that the NASDAQ can possess. So for example, we can get into a NASDAQ play, be targeting a 10-point take profit, and it goes down 25 points before it actually hits our take profit, versus on the ES, maybe we have a 2 or 3 or 4-point take profit, and it goes down 2 points, right? So it could be a little bit more easily managed as far as from a risk standpoint. So if that's more your fancy, then maybe stay with the ES. It's all the same trading concepts and styles. I'm not going to trade the NASDAQ any different than I do the ES. But for example, on a 20 play here, the range on this 20 play is 12 and a half points, right? On that last 20 play long, or on the big 20 play long, because we had 2 of them, but I'll just go from the first one. If it's 12 and a half points, well, at that particular time, my ATR is sitting at 6 points. So should I be looking to get a full 12 points? Maybe. Did we get a full 12 points? Sure. But maybe I look to take, 5, 6, 7 points, right? Our next setup here was a range of 3 points. So maybe I have a 5-point stop loss, and I'm looking for 3 to 5 points to the upside. Try to capture that 1-to-1, right? Or a little bit less than a 1-to-1. But still, right? Hold a runner again. Well, what about it? I hate the people who say, well, why would you target 5 points, to only, or with the 5-point stop loss only make 5 points? Well, then fucking leave a runner. Then leave a runner then, right? Take 4 contracts, sell 2, hold 2 runners, and hold it. Right? Do what you want as far as taking profits, but so we're putting in a little bit of a higher low here. See if we can get a second attempt to try to test the top of this range. Got more people. Look at Nate, guys. Nate's onto another PA account and another 250 bagged. So I think he's on 4th PA account, all at around between $200 and $300 profit. Beautiful work there. Beautiful work. Good stuff. Personally, for me, I don't watch the ES because it's just too slow sometimes. It's just too slow. Right? Even though it's kind of like the same moves, I just like the bigger volatility. Again, it'll bite me in the ass, but personality style fits it a little bit more. So we're coming right back up into this previous rejection spot where I took that short the last time. Now I'm not going to say let's short it again. I'm going to wait this out and see, do the bulls really have, do they have the juice, right? Do we got the juice, or are they going to be a crumb and come all the way back down, right? Market also has been giving some decent sized moves coming out of lunch. So maybe, you know, look for the next 30 to 45 minutes we get some type of move. Whether that's a move back down to the lows, or, you know, we'll start to take control of the chart and break this downtrend. I'm trying to grind out this last eval, so I'm open to taking another trade or two. And Nate with another one, 158 on another PA account. Guys, I'm looking at some of my stats here on this Top Step account. Having control and having discipline to kind of pick your spots where you want to trade, not feel forced to trade, right? Not just making things up as far as levels to go back and forth on, but taking legitimate setups that align with your playbook and your strategy and your edge, and having the discipline to stop when you make anywhere between $100 and $300, right? Because some days you'll make more, some days you'll make less. But having that ability to do that, this one particular account that I have with Top Step is up $2,700 and $2,723.06. Now, mind you, yes, it is the 23rd of the month, so the month is coming to an end. I'm following an 84% win rate. 84% win rate. This week I have one red day this week. But the gains though, right? If I just kind of go back in time, yesterday 239, 125. Again, Monday was a big day. It was $1,000 day. 245, 516, 527, 322. Another losing day going back to last week, $500. So what I'm saying is that I've been a lot more comfortable. I was going over this with, you know, everyone in the room earlier. I'm comfortable today. I'm up 198. I'm comfortable. I don't feel stressed, right? I don't feel stressed at all. I feel pretty good actually. Yesterday I made 239. I didn't feel stressed. I felt pretty good actually. 92% win rate yesterday. The day before that, 100% win rate, 125. Felt no stress. Felt no stress, right? The day I lost to $500, I had a 75% win rate. So I had a 75% win rate, but I still lost $500, right? Put two and two together. How do you win more trades than you lose? Because you size up, trying to increase that balance. Take one bad trade. One bad trade. On that particular day, I took six trades and had a 75% losing rate, right? Or 75% win rate. I had six winning trades. Oh, excuse me, six winning trades, two losing trades, a total of 8 trades. So I won 6 trades, I lost 2, and I was negative $500. Why? Because I got into a feeling of I'm making a little money. Cool, I feel good about the market. Here's my next setup, heavier size. Boom, get slapped. Boom, get slapped. So that's a lot of mental stress, right? That's a lot of mental stress that you put on yourself to try to, you know, win 4 trades, 5 trades, 6 trades, 8 trades, 10 trades. You know, you're going to get to a point where one of those trades is going to be a loser, right? It is going to be a loser. What I should have done was go up a little bit and then size all the way down. So that way my losses weren't going to eat up the profits. But again, I'm human, I'm stupid, I'm an idiot, right? Just like everyone else out there. You know, you think that you're untouchable and you take one trade and it gives everything back. You take the next trade, it's a loser. So I'm a lot more confident and calm when I let some trades go and I kind of wait for my particular setup. I let the trades come to me that feel good, right? Like if I don't feel good about it, I'll just let it go. But the moral of the story, what I'm trying to get at is that over the course of a month, it's up $2,700. Guys, that's one account. So that's not, you know, shooting for the fences, trying to make $500 a day, $1,000 a day, $2,000 a day. That's just kind of picking your spots and letting the days kind of accumulate however they may, right? And when you do that, when you are on the funded stage, or when you do take money out and put it into a personal account, and now you're growing a real live account, if you just practice good trading, you're going to take a payout in 30 days. You know, you're going to take a payout in 45 days. So practice good trading, just let the days accumulate. Don't really be so focused on, I need to make X amount if I want to make $1,000 this month. I need to make X amount if I want to make $5,000 this month. Forget about the number. Right? Because if it was that easy, then why can't we all just say, I want to make $10,000 this month. Let me go out there and trade balls to the wall until I make $10,000. If it was that easy, it's not that easy. Like this business is not that easy. You know, I definitely recommend everyone to find another occupation or another hobby. Like this business is very stressful and it's very hard, and there's a harsh reality that comes to trading. I've been doing this for 10 years, and about 8 of those years have been full-time, where I need to eat, sleep, shit, feed my family, feed myself, and pay my bills off this. You know, it's very, very stressful until you actually do the things that need to be done for a long period of time, to where your account is at a size where you don't feel the little nicks and bruises, right? Because we're going to all get those nicks and bruises of losing days and losing trades. But it's the people who've really never experienced the payout or growing an account or have actually made money trading, that every little nick and bruise that you feel, it's like the end of the world. You need to go out there and find another strategy, or find something else to trade, or follow someone else, or follow, you know, another Twitter page or another whatever, right? Instead of just thinking logically and thinking about what you can do over the course of a year. You know, you don't need to make more money today, and you don't need to make more money on this trade. You need more money. Yeah, Nate. I mean, you're having a hell of a day here. You're having a hell of a day, Nate. Just kind of hanging out. I wouldn't give back a fucking penny of that. Because, you know, it's not like you're trading an evaluation account, right? Where who cares? Let's take another trade. We lose some, whatever. Who gives a shit, right? You're trading PA accounts, right? We ain't trading funny money no more, right? So we can continue to stack those PA accounts and make sure we get ourselves in line for a payout at the end of this month or next month, right? I don't know where you're at in your journey, but again, like the month's over, so I'll just say June. We'll be ready to get paid in June, right? That's the goal. We want to get paid in June, so it's all about protection mode. And I like the idea of taking one at a time. That's the same way that I do it. I do it like that, man. I do the one at a time deal. I will copy trade the evals, but I do like the idea of the one at a time. Two max, to be honest, on a copy trader in the funded. That way, because that way also it spreads out your risk, right? If you think about it like this, let's say we take our first trade, it happens to be a loser. Great. fucking put the account to the side. Let's go take the next trade, the next setup that comes to us on another account. Maybe that's a winner, right? So yes, maybe overall we're 1 for 1 on the day. One trade's a loser, one trade's a winner, but we got that one account green, right? And then the next day it comes back and that account could be green again, so forth and so forth. So I like the idea of spreading risk. That's why I say we don't need to make more money. We need more money to trade. And by having more money to trade is either A, you better reach in your pocketbook and buy load up your personal account, or you better go out there and buy more evaluations and get more funded accounts. That way you have risk spread out, right? So to all of you guys out there, especially you guys who are on YouTube, you know, if you guys are trying to work one account because you're learning and you're practicing, you're doing this yourself a disservice, because what you're forcing yourself to do is make money on such a small amount, on such a small account, right? That'd be like someone who tells me, I want to learn how to trade options, but I only have $200, right? That job is going to be extremely difficult to do, because on that first options trade that we take, we better win. If not, it's gone, right? We're not going to have enough money to trade. So, you know, but if you told me I have $20,000 in my account to learn how to trade options, and I only want to trade, you know, premium between $100 and $200 and keep my risk around $50 to $75 a trade, we have a lot of drawdown. We have a lot of wiggle room, right? Where we can lose a trade here, get it back, play again, versus when you have such a small account, you're really forced to go on a win rate, a winning run quickly. And if you don't hit that winning streak quickly, you're going to blow yourself out. So to everyone else out there, get multiple accounts. These stupid prop firms are so cheap, right? They're so cheap. Why are they so cheap? Because there's degenerates out there who just blow them up, right? So they just keep filtering them in and out. Don't be a degenerate, don't be stupid, but go out there and buy multiples, right? We're talking $20 to $30 to get an account. You know, we got to do whatever we can do. If you guys are really serious about trading, you know, pick up a second job, you know, do a side hustle, you know, sell some of your crap on eBay. I don't care what you got to do to get the money to go buy more accounts, but you need more, right? That you always need more, right? I asked my mentor a long time ago, how much money do I need to make so I can do this for a living? More than you can imagine. I said, well, what the fuck does that mean, right? Like, a lot. I don't get it. I don't understand. Like, you know, 20,000, 30,000, more. Wow, really? Like $1 million, you're saying? If I put $1 million, I could do this for a living? You need more. That's all he told me. More. You always need more. Whatever you think you need to make a living off of this, you need more. I'll tell you guys that. You need more. Right? Someone asked me one time, how much does it take to make, you know, like $4,000 or $5,000 a month in options? Because that's kind of what I'm doing right now a month at my job. More than you think it does. Well, I have, you know, 10,000. Will that do it? Double it. Guys, we're getting rejected again off of this 50-day moving average here, coming down to this 20. If we really start to break down this uptrend, this Bollinger Band's getting tight. You guys know I love when the Bollinger Bands get tight, because it's like a balloon that someone just keeps blowing air into. Eventually it's going to pop. So if we start getting a break down to the downside, we'd be looking at prices of around 875, and then if we lose 875, we could be testing the lows. If we break to the high side, I'd like to see us break the Bollinger Band to the high side, get over the 30s, and then if we can get over 50s, maybe the bulls scream this into the close, right? But Bollinger Bands are getting tight here, so maybe we might be getting another move. The scribbles on my chart they were done by preschoolers. Preschoolers, they came in and I gave them a drawing tool and a pad, and I told them to just draw a bunch of lines. And then I try to trade off those lines. Our room is 83% green. I'm up. I'm So not a lot. Not a lot. I mean, there was definitely opportunities to make more money. But again, I've kind of been telling people, like just stumbling across my page. I'm a full-time options trader who has a secondary gig, which is trading futures for prop firms. I also have a personal account that trades futures as well, but I don't really spend too much time over there because why? When you can use the prop firm. I have enough money tied up in my options account. I don't need to. I don't need. Mm-mm-mm. I stream. I mean, as of late, yeah, this week I'm streaming a lot more. I'm active in my Discord a lot more, but for the most part, yeah, I will be streaming a lot more. But I always will do the market open with my team at Discord. Just come on here later. 20 SMA play short here. We got this Bollinger Band sitting at around 880. And then below that, we've got support at 73. So what I would like to see, again, if anyone is short on this 20 SMA play, I'd realistically like to see us break down through this linear regression, bounce, get rejected, and then clear it out. I'll be interested in taking that short position here, unless we're talking about just going on a quick scalp here. Quick scalp. Again, if you're thinking quick scalp here, you've got a previous low wick that's going to give you a little bit of trouble here at 886. So we need to clear out 886 to get 78. So maybe, right? Maybe it comes down here and tests this area. Range on this 20 SMA play here is 23 points. Actually, we can, oh, fuck, I should have got it. I was going to say, we can throw, that's a bad late entry by me. But we can throw a, is it Let's get some people to let's get some people to see if did we take that trade? Did anyone take that 20 SMA short? John, you got it. John, you've been on fucking fire today, dude. Charlie and Stockpilot got in late, scalped a little bit. Good job, Charlie. I'm telling you, it's just good job, Stockpilot. Good job, guys. It's just technical analysis is all it is. It's like it's so simple it's stupid, right? It's so simple it's stupid. Us as humans, we try to always figure out why something's not going to work or why you can't do this, that, and the other. At the end of the day, trading is one simple thing. Having conviction enough to put your fucking money where your mouth is and then manage that risk. That's it. That's it. There's only $157 in less than 5 minutes. We'll take it, right? We'll take it. I mean, we're talking about less than 5 minutes, only 157. Whatever, right? I only took $60. Whatever, right? So what I'm saying is that if you can do that, right, the way I was taught, if you can find something that works for you, not works for me, not works for the next guy, what works for you. Again, can you take variations and things that I do? Sure, we can take variations and things from here, and here, right? That's the beauty of trading. But when you find what works for you, more times than not, and you've back tested that and you've taken those trades and you've done this, that, and the other, well, then it's just up to you to trust what you're doing. And for people on YouTube, because you guys you don't hear my rants every day in the room, and you don't get the luxury of listening to my dumbass talk every day. But if you size too heavy and you're wrong, it's not because you're a bad trader. It's not because you need a new strategy. You're just sized too fucking heavy for your account. Does that make sense? So tone it down a little bit. Bring yourself back down to reality. You're not going to make $1,000 a trade. Bring yourself down. If you're trading an evaluation for a prop firm, you've got a $2,000 account. Let's just call it that. You're not going to make $1,000 a trade. Okay, get it through your skull. Okay, taking $50 here, $100 here, $300 here. Those good trades will come where you make $400, $500, $600, $700 days. Those days will come. Like for example, this right? Move still continuing to go. So in these type of situations where the move is still continuing to go and you feel like, oh, the train left me, right? Because again, there's people that are 100% okay with, I executed the plan, I followed my strategy, I wanted to take profits here. You guys are fine. You guys are content. But there's people out there who are saying, well, I should have not sold out because look at it, still going. But did you know that it was still going to go? No, you didn't. But I could have made more money. Well, sure. Then what you want to do is, how about you just do this? Take 4 contracts instead of the 3, or take, 2 contracts instead of the 1 you were taking. I don't care. Sell the first ones where you're supposed to sell, put a break-even stop loss, and hold a runner. It's that fucking simple, right? Now, again, some people are okay with holding runners, others aren't. I love holding runners when I'm trading options. Not so much when I'm trading futures. Why? I don't even know. I don't even have an answer for you, because I just like to get in, see the move that I want get, confirm, and I just want to lock it in. That's it. I don't know why. Some things just the world doesn't have answers to. Look at this guy, dude. Look at Burks. This guy's an animal. Hey, good job on that 315 on that 20 short. Only 315 in less than 5-10 minutes. Only 315. Great job, man. And this guy Burks went out and loaded up on those 250 evals and took $6,000. I mean, this guy's an animal. Guys, we're coming. I feel like this setup, I've mentioned this setup like a lot over the past week. We get that first low, we bounce, we get the double bottom, low of day, bounce. We get that triple bottom. Have I not said, has it felt like this pattern has been happening a lot? This triple bottom. Or one would say this head and shoulder, this inverse head and shoulders, right? I've never been big into the head and shoulders bullshit, the cup and handle patterns. Yes, are they valid? Yes. Let's just call it what it is. Price action, put in a low, it bounced, confirm that low, put in a new low of day, bounced, and now it's back down testing the previous two lows. But we could be looking at a nice bounce here. If we don't push in, if we don't push down, right, and get through 18,800, if we don't do that, we could be looking at an end of day little bounce here, right? Am I willing to bet on it? I don't know yet. I need to see a little more. I need to see a little more. You know what I would have liked to have seen was I would have liked to have seen a bigger or we can still see it, but I would like to see a bigger wash, like a little bit closer to this previous low, and then a big candle, like a big wick. Get me closer to this support down here at 800, and then I would be ready to take that bounce. The only other thing I can see here is if we get over 875 into 880, over 880 has room to 899. But let's continue to watch this. Again, if you're green, and most of you guys are in the room, most of you guys are green in my room. If you still want to trade another account. If you don't have another account to trade, go buy one real quick. Right? If you want to really scratch the itch. That's if you're up pretty decent, right? If you're scratch or you're a little bit green, you want to take another trade, go for it. But like some of you guys are up 300, 400 on a day, 500 on a day. Locked out 5 accounts per day. Yeah, good job, John. Yeah, just keep locking them out. You know, just keep locking them out. I'm real big on $100, $200, but times 5 accounts, right? Like that's great. That's great. Yeah, I wouldn't give them back shit either. These guys have no problem taking it from you. They never want to give it back, though. So don't give it back to them. I think it's in... Oh, never mind. John Garcia took the 20 short. Good, John. You locked in profits, right? Tyler Glass took the 20 short on MNQ for 240. Look at these guys. Look at the YouTube guys coming. The YouTube guys coming through taking 20 plays. There we go. Good job, John. Still pushing down too, you know. So we had all the time in the world to get profits. Because sometimes 2 or 5, it depends. It depends. 2 or 5 minute time frame. I tend to rock a lot of the 5 minute time frame. Just understand that the 5 minute time frame, obviously bigger range, right? And just understand that a 2 minute time frame, when the market is a little bit more choppy, is going to get stopped out a little bit more, right? But sometimes the 2 minute chart is providing great little scalps, and the 5 minute is getting chopped to absolute bits and pieces. It's what's comfortable for you. It's truthfully what's comfortable for you. So if you have no problem with the faster pace on the 2 minute, use a 2 minute. All the same rules apply. If you like to kind of sit back a little bit and try to trade a little bit of a bigger range, go 5 minute. But like, I would never say like one's better than the other. Like, is the 1 minute better than the 2 minute? Is it 2 minute better than 5? How about the 15, right? We could also go there if we want to. It's the only thing that changes is ranges. The only thing that changes is the range of the candles. So how much risk you're actually putting on the table is going to change. Sometimes you get certain setups, you know, a little bit quicker on the 2 minute, but they fail. And sometimes they never confirm on a 5-minute. So, and you would have made money only on the 2-minute. Point being, whatever you're cool with and comfortable with. No discrimination here. However we can make money. Like, let's look at the 2-minute. So two-minute entry was 904, and the 5-minute gave us our entry at 894. So you had a 10-point advantage on the 2-minute chart. A 10-point advantage. So for someone trading the 2-minute chart, they could have been in and out before us on the 5 even got in. In this particular case, it confirmed for all parties, so we all had a chance to make money on it, which is great. I like when that happens. I hate when the people are on the 2-minute and they're making money and the people on the 5-minute never made any money because it just fizzled out. That's when you know the move is good. Not only did it confirm on the 2-minute 10 points earlier, but it also confirmed on the 5-minute for everyone else who's never even looking at the 2-minute, and they also made money. You know, truthfully speaking, the range here was 23 points. Did we get it right? 894 down to 843. Right? You got your full 1-to-1. Full transparency, I have not been taking the full range of the candle. Like, I haven't been looking. I've been looking to risk the 23, but I've been taking my profits a lot quicker. I think my bracket is set up for, depending on how many contracts I'm trading. Again, it all depends. I think when I originally set it up, it was for like 8 or 10 points. That's when earlier this week the market was like not really giving big moves. So I was like, okay, fine. You're not going to give me my 10 points on my setup. Then I'm going to go 8 points. And I think it's been there. I've been liking it. What it's working out to is like $60 a trade, which again, it's not a lot of money. I'm not here saying, you know, you're going to fucking, you know, you're going to buy a Lamborghini making $60 a trade, but don't worry about like you only made $25 on your trade and someone else made 300 on it. So what? Maybe you're comfortable with that amount of contracts and risk. You know, because again, when you start worrying about what everyone else is doing and not worried about what you're doing, it's gonna kill your mojo. It's gonna kill your mojo. Like, again, those of you guys on YouTube, do I realistically think you guys care how much I make or lose in a day? No. Does it have any effect on your daily life? No. Like, are you going to put food on my table if I blow all of my accounts because I'm trying to be some hero? No. No. Right? So I'll do me, and y'all do you. Oh boy. Good day today though, you know? It's been a good day today. Like, as far as setups that are confirming. As far as setups that are confirming. Right? And what did you guys say? It's a decent day today. I mean, coming off of a big gap up day because of NVIDIA earnings and all that stuff, you know, they the majority of the moves, the move today has been down, sure, but I mean, even the long setups that we were taking earlier, they actually followed through a little bit because we had range, right? Like sometimes you get these type of plays, but there's no range. Like it's 5-point range, 8-point range. Just it's not a whole lot of movement there. But the range is pretty decent on the 5-minute. 30-point range here, 38-point range here, 29 points. I mean, shit. If a guy like me is looking for 8 to 10 points on my setup, and we're ranging 20 to 30 points a candle, 23 points here, 30 points here, 25. Yeah, guys, we're getting a very aggressive washout here. Very aggressive washout. See if how far down we come back and test this prior low. Ultimately, we do have support around 798. I'm very curious to see if we do sweep. What do we do down here at 798? At 798, if we get some type of reversal off this bottom linear channel, I'd be interested in a short and a long back up. Or just a scalp. Bouncing off the 200 on the 15-minute. What else do we got here? Yeah, we are. What about the 1 hour I need to see get over? 1 hour I need to see get over 852. 1 hour does have room down to 800. What about the 30-minute? 30 minutes below. 30 minutes below its supply here. So on the 30-minute, again, we need to see it get over 852. So it looks like right now we only have support on that 15-minute time frame. Bob's saying we're at the overnight lows. Yeah, overnight lows is there. 4-hour time frames resting on the 20 SMA, but aggressive 4-hour candle previously. So if we do confirm lows of 800, look out, right? Look out below 800. Weekly's kind of losing some steam. Daily's also losing some steam. Guys, this could be a short-term top here. Could be a short-term top, kind of. Also, long weekend, right? Before I even go any further, got a long weekend, right? Memorial Day weekend on Monday. Markets are closed. So with that being said, think about this. I'm looking at the daily chart right now. If we just kind of go back here to the last start of the bounce, going back to the beginning of the month on the 1st, right? When we put in those lows on the 1st and 2nd, we've been on a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17-day push higher. 17 days pushing higher. Out of those 17 days, 1, 2, 3 days, not including today, have closed red. So we're looking at 14 green closes to 3 red closes, with today on a daily chart putting in the start of maybe a blow off top, the start of maybe a pause, maybe a rest, and this inverse hammer. Now we still have support here at 770s. That's the 5-day moving average. But if tomorrow, guys, and to end this week, there's some profit taking coming off the boards, there's some liquidity coming off the boards going into the long weekend. Again, remember, these guys who trade big size, these hedge funds, these institutions, these big money retail players, it's a 3-day weekend. We can wake up on Saturday, the whole fucking world can be on fire because of some headline that came across the news talking about World War fucking 7, right? So what I'm saying is that, generally speaking, going into Black Friday, going into Christmas, going into New Year's, going into Thanksgiving, going into 4th of July, you would be surprised. 4th of July is like the biggest trader holiday. Right? It's because when all these bigwigs, they go out to the Hamptons, they go down to Florida, they go out to the Bahamas with the family, the summer starts, right? Liquidity starts coming off the table. Trust me, I've been doing this a long time. Memorial Day is no different. right? So it's a 3-day weekend. Some profits could be coming off the table. We could be looking at some lows. I'm not saying this is the all-time high, so we're not going to put in a high. That's not what I'm saying. What I'm saying is we could be resting for a little bit here, at least until we come back to start next week. Maybe it's a possibility. If that's the case, then yeah, go down to your smaller time frames and see. If we confirm the low of day, well, then we have room down to 800. Remember what I said about that 803, 804 level. If we do start to lose 800, look out, because that would be on the 1 hour time frame. 1 hour time frame be putting us in the range of coming down to that 770. So I feel like the 770 marks is a big level across all time frames, and the 800 mark is a big level on all time frames where I'm finding support and resistance there. And we have a long holiday weekend. So again, I ask, are you sure you guys want to do this business? This kind of stupid crap runs through my head all the time. And nothing I said could be right. That's the thing. We could scream higher into Memorial Day weekend. Put in a new high. Okay. Oh, well. I hope it doesn't bounce from right here a little bit. At this point, I'd like to just see the sweep. See the sweep and then give me a bounce. It's only 10 o'clock. I feel like it's already ready to close. So again, coming out of lunch here, what have we been doing during lunch? Maybe we reverse that. If that's the case, then maybe we do get a little bit of a bounce into this 870s area. A little bit of a big's bottom here. Because ultimately, if the Bulls got any juice coming out of lunch, they've got room push it to 60. They've got room to push to 75. I don't even need that much, right? That's it. Got filled, guys. Um, is this bounce, extended move down, right? So we already had the 20 play. Excuse me. We already had the 20 play, right? We had the loss of the linear regression. We broke through that tightening Bollinger Band. Okay. We tried to sweep the lows. There was no follow through. There was no follow through, and we did not put in a new low of day. So once you get that candle right here, 12:05 Pacific Standard Time, once you get that candle where there's no follow through, what you're then looking for is a following candle to start taking out the previous one. Your stop loss is clear. 18,825. Okay, if this breaks up and then breaks down, get out. That's it. There's no more ifs, ands, or buts about it. Why am I confident in taking it? Again, one, I'm only looking for a small price target. Okay, 8 to 10 points. And two, well, there's space here. Over this 5-day moving average does have space into 874. So that's all I'm looking at. That's all I'm looking at. Just really quick. It's just something. It's just like it's an inside joke, Zach. It's an inside joke inside my Discord. Supply is sitting at 867. Back testing something for someone right now, guys. Give me a second. Five-minute candle close above the 5 moving average. Yeah. Yeah. So you see how. So Bob, it's a quick scalp, right? So it's a quick scalp. So what you're looking for is the candle that closed above that 5 moving average. You're not looking for that candle to close over the 5 moving average. You're looking to enter when that candle that's breaking that 5 moving average to clear out the previous 5-minute candle. Okay. So as there was no follow through, again, correlate this to your Eastern time. So 305, that 305 candle, once that high gets taken out at 310, you're in. Again, quick scalp, right? So we have to be thinking, if the range on that candle was only 15 points, right? Only 15 points at 305. Well, I need to be taking something close, half of that, 7-10 points if I can get it. And I have to be mindful of this declining 10-day moving average. So that declining 10-day moving average is going to act as pressure. So basically you're getting in through 310 as we're taking out 305 high. That's getting over the 5-day moving average. And it went from, should have been getting in around 846, and it went up to 859. So 13 points, right? It went up 13 points. You're looking to take your profits into that. Now, again, if you got trapped, right, where you're not really expecting to take profits that quickly, then yeah, then now you're trapped. But it's like you can avoid being trapped by trying to take profits into as close to that 10 as possible. When it starts getting rejected, you got to just get the hell out. But that would be, what we were looking for on those bounce plays, right? If you go back in time, if I go to 10 o'clock my time, look at 1 o'clock, right? Look at 1 o'clock on your time frame. That candle is also another setup like that, right? Look at 12 o'clock. That was also another setup, right? So those two, look at how those bounced. Boom, boom. This one tried to, but we had fucking resistance right here pinning us down. So again, unless you were taking just quick profits, sub 10 points, you're going to get trapped. But again, like, we never know if we're getting trapped or not. It's not like we have a crystal ball. Like I didn't know, like, this is not going to, confirm and put in a new low. Again, I only had an 8-point take profit on the thing, so I just got in and it just manually filled me. So again, I'm going to back test something for someone else now. So Zeke, if you look at the play, right, that you're talking about, that's here, okay? That's right here. So the picture you just showed me is this candlestick here and here. So you thought that, and I want to show you something. I want to point something out. You thought that 200, right, was going to reject this down move. That's what I'm understanding, right? You can just give me a thumbs up or something. But you thought that the 200 was going to reject the down move and it was going to bounce. So you got long and it stopped you out. Has nothing to do with news, right? Has nothing to do with the news. The news play just drove it down farther. First issue, you thought. We don't think anything, right? I don't think anything. I can have a million thoughts. It doesn't mean anything until the chart's going to confirm. I would not take this bounce off the 200 when we're in an active 20 play short. If anything, you should have been short here, right? You should have been short here on the confirmation into the 200 and taking profits there. But I'm not going to think that we came down to the 200, we're bouncing, candles turning green, so I'm going to get long. You're chasing. This is a chase because this bounce could got rejected here, here, here. It could get rejected all over the place, right? So all it did was confirm the loss of the 200. In this particular situation, how I would be looking at the chart, because we're in a downwards move, I'm looking for a test of the 200, some type of bounce, and then a break of the 200. Now, once we break the 200, once we break the 200 here, and we put in this low below the 200, now I'm looking for a confirmation of the loss of the 200. That's here on this candle. I want to get short here. I'm getting short here, and I'm taking profits into this next level of demand. So at no point on this chart would I have thought to go long, because thinking to go long is just guessing. Like, you're just guessing that, okay, 200's here, so we have to bounce. We don't have to do anything, right? We don't have to do anything. It has nothing to do with the news, right? The news could have sent it up, down. Like, just playing that type of thought process is going to get you hurt, because if we think, well, there's news coming out or numbers or whatever, right? There's always something coming out around this time. We could be right and look like a hero, or we can be severely wrong and get stopped out. But if we're going to bounce, a perfect scenario. If we're going to bounce, this would be what we call Big's bottom, right? Just joking around. This could be a bounce. It could be. But guess what needs to happen? Guess what needs to happen? Something like this, where we put in that down move, and then you have a green candle taking out red. Something like this off of the Bollinger Band support. Green candle taking out red, low of day as a stop. Something like this one here, no follow through, green candle taking out a previous candle. This candle's still red because it never confirms over the high price of the other one. You getting in. Now this one didn't give you much, it only gave you 13 points. But what I'm saying is that's what you're looking for. You're not looking, so you had the right move, but what you needed to see have happen was this red candle, this little hammer candle here, it needed to take out the high of the previous candle. So good move in identifying that we're at a serious level of support, aka the 200, but we need to see that come down to the 200, halt, right, stop, and then we need to see a following candle take out the next one, use the 200 or the low as a stop, and then ride it up just like it did here. Take out the linear regression, halt, following candle takes out the high, use your stop here. Downwards move, halt at the Bollinger Band, green candle takes out red, low of day as your stop. You see how that makes sense? So there was no short, there was no long position here. It's just red, 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 pause at the 200. So you thought pause means now we're going to reject the move. No, it's just a pause. It's like he's just resting, right? We're just resting for the next move. If this was going to be a true pause and rejection, we would have had the following candle take out the high, and then would have pushed up higher, and then we could have just used the 200 as a low, because technically, like, your stop loss, you don't even have one here on this bounce. Like, where would you use the stop loss? Below the low, but you're jumping in on it. So I hope you understand what I'm saying. You know, like, what was wrong with the 20 SMA short, right? Like, why didn't you take this short setup? Was it because you weren't on the screens? Then that's okay. That's fine if you weren't on the screens. But this was a short. You know, I think a lot of guys even took this one today. I know a lot of guys took the loss of the 200 today. Zeke, make sure just if you see something like that, buddy, and you're gonna trade it, throw it in chat, right? Throw it in the futures channel. Hey guys, what do you guys see here at the 200? You guys interested short? Someone will speak up, right? Someone will speak up. Don't just sit there and try to do it all by yourself. You know, use the room, use the team. Like if I'm right there watching it as well, like I can kind of give you my thoughts. Again, I don't tell anyone to buy or sell or do none of that crap. But what I'm saying is I can give you my thought process on what maybe I'm looking at. Like here's another one. Like look at this one here, right? Extended down move. It did give a little bit of a bounce here, broke down. Look at this hammer candle, right? Look at that hammer candle. You could use that low as a stop as soon as green candle takes out red again, because this candle didn't take out the previous one. You would get in. Now again, how much money would you have made? I don't know. It's not that much, but from 837 to 848, this is 10 points into supply, right? Double bottom, boom, boom. You know, does it confirm a new low? I don't know, maybe. But if you're looking for this scalp, I mean, it tested the 10. That ran right into supply, so you should have just taken your profits there. If you want to hold the runner, we'll fucking hold the runner, right? To see if it gets up higher. I hope that makes sense, what I was saying there. And to go back to you, Bob, these plays, sometimes they work, sometimes they don't, man. It's like, honestly, like, they're like 50-50, you know? For every handful you win, you lose some too. But it's low risk. It's low risk because we know where our stop is at automatically. The stop's the low. The stop is the low. The stop is the low. So if it just breaks down, cool. We already knew how many points we were going to lose, max pain. Just adjust your number of contracts traded to fit how much you want to lose if it doesn't work, you know? Ah, gotcha. Yeah, that's cool, Zeke. Yeah, I mean, if you missed that trade, you missed a trade. I mean, we can't always be sitting on these charts for every single one of them. But yeah, like as long as you identify that you were kind of chasing that move, like you were not so much of a chase, but it was more so of like, I think we can bounce from here. If I get in here, I'm going to be at a really good spot, right? That thought process is okay. It's fine because that's what we're doing on these bounces. But we just needed to see one more part. We needed one more step to that whole setup. And that one step was the confirmation of taking out the previous candle. We never got it. So when we never got it, that invalidates that bounce, that, or what you were saying, that rejection of the downwards move into the 200. We needed one more thing to happen, and that was this candle to take out this one. And then we use the low as a stop. And then hopefully, right from there, then we're just hoping it runs into demand, You have your options to take profits at wherever you want to take them. But it was just one more step, buddy. Like you were right there. That was the right thought process. Because again, I'd be lying if I would tell you that maybe I wasn't thinking this was a big bottom. If I was watching this chart at that point in time, boom, like maybe we're gonna bounce here, but I need to see it. I need to see that last step happen. And when that last step didn't happen and it put in a new low, that becomes invalid. It becomes invalid. Where's Nate at? Nate's not in the room in the voice chat anymore. Nate said he was done, goes to the gym, comes back, knocks out another 262 on another PA. Or he never even left for the gym yet. He's barely leaving now. Yeah, go to the gym. Go to the gym. So guys, so that bounce play is invalid, right? It was valid for a second. It gave you 10 points, slammed into supply, and is now back testing it again. At this point in time here, I'd like to see it at least test 800. I'd like to see it test 800 and see what it does down here. That'd probably be your better chance for an opportunity. Again, if you guys are following the 20 SMA plays, it's been an active 20 SMA play here now for almost an hour. Short. Okay? Short. All this other junk that I'm talking about, this other jazz about bouncing and stuff like that, that's all it's just like picture a construction guy with a tool belt on. They're just different tools, right? They're just little scalping mechanisms. It's not really like, you're just looking for a little piece of something. Your real move was here, short, right? It was short through the 20 and it was short through the linear regression. That was the real move. There's your flush through low of day. Let's see that 1 hour chart. That 1 hour chart's coming down to the 100 EMA and the 100 simple. Could be looking at prices in the 70s. Again, I feel like I've said that a million times already. Those 70s seem to be holding weight on a lot of different time frames. So if one is short through previous hour lows, I mean, look at that beautiful setup once we confirm the 50 SMA. That's just been a short setup this whole hour. Or if anyone is just short in general, you're slamming right into the 100 support system here. So take your gains, you know, take what the market gives you, not what you want. Don't be greedy. Market doesn't owe you guys shit. Doesn't owe me anything either. Yep, later, John. Good job, buddy. I just pulled up a 2 minute chart, guys, just for reference in case you guys couldn't see. Look at this a little bit. New low of day, guys. New low of day. New low of day. Took a quick scalp on that low of day now. That brings and then we've got the solo account that we're trading. Hedge fund. I don't need to make millions of dollars. So, and the options account was locked up a long time ago. We did the Tesla trade today, the bounce this morning for 760, and then a very small play on the Nvidia as well for 85 bucks. So all in all, very, very good day. I felt like the moves kind of confirmed and gave us enough range to kind of trade. With that being said, I'm going to cut the live stream here. Again, I'm getting a little hungry, to be honest. All the guys in my room, I'll be in and around the Discord. I'll kind of still be watching the market here and there, but I'm pretty content. I don't really want to push it. Let's hope you guys stay green. If not, hope you guys can find another play out there. But again, protection mode is always the first thing.